Well, hi everyone, and welcome to our Buffett and Beyond Research Saturday Market Recap Letter. And this is September 30th, 2023. And remember, folks, if you want to live on the beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And the beach that we're talking about right here, just a few miles from where Jimmy Buffett had one of his homes. And we see there are still artists out there on the beach. This is absolutely beautiful. One of the pictures taken by one of our staff. And folks, if you want to sign up for a 2-week subscription to all our newsletters and our 3 videos each week, we just need your name and email. Go to buffettandbeyond.com. And Buffett is spelled with 2 F's and 2 T's, and sign up your name and your email address, and we'll send it out all to you, folks. And this week, let's get right into it. The market, well, it hit its pit bull low on Wednesday and then rallied to form a short-term buy signal. Now, next week will tell us if this rally is real or just another head fake, because on Friday, well, it just didn't do too well, did it? And let's get right into our weekly stock analysis video. Lam Research is a supplier of fabrication equipment for the semiconductor industry. Now, this stock is up, just a little bit over 50% this year, and just beginning to make another move to the upside. All the technical indicators are showing it's ready to go. All the fundamental statistics are saying this stock is a good stock. So, folks, you want to see the video on the weekly stock analysis on our site. And our ETF video, well, we can hedge our top ETF stocks in a normal portfolio, and all the work is showing that we can outperform the S&P 500 while taking on much less risk than the S&P 500. But it wasn't until this week that we were allowed to hedge inside an IRA using inverse ETFs. Now, this is with Schwab brokerage, and we can use these inverse ETFs and option spreads inside our IRAs. And folks, this was just passed on this Thursday, because most brokerage houses don't let you do that. But it's not a rule that you can't do that. It's up to the individual brokerage house. So finally, Schwab, welcome to the 21st century. So we can now hedge our ETFs inside the IRA, and we pick the top stocks from those ETFs, so we outperform the ETF itself each and every time so far in the past, folks. So sign up for our free subscription, and you're going to get this ETF letter showing you how to hedge those top stocks and how to outperform the S&P 500 with less risk. Okay, let's look at the market this week, and we can see that we came off a bottom here, hit the top band. Now, the top line and the bottom line, the red lines, are volatility bands, once known as, or still are known as, Bollinger Bands, the fellow who invented this. The central line is the 20-day moving average, and we can see the market came down, played around this 20-day moving average for about 2 weeks, fell down, and broke down through the bottom band. Now, when it breaks through the band on the top side or the bottom side, it means that the market is really weak or really strong, like way back over in here. Yeah, once it broke through to the top there, you can see this market just kept traveling up. And now we're down on the downside down here, but there's a gap to be filled right in here. And folks, now that we've had the downside and now we have gone back up and closed up inside this bottom band, we have a chance to see a little rally. Monday will tell us all. So we'll see what happens this coming week, folks. And down here, our intermediate term indicator is still pointing down, but boy, oh boy, it's oversold, and we're ready for a little bounce in here. So let's see how long it lasts. But Friday was not a good day because the market went all the way up. Now, see this line here? This is Friday. The market went all the way up and then closed to the downside, actually. Not at the bottom of the day, which is good, but it closed to the downside right in here. So, folks, Monday's going to be a telling day, and we're starting a new month, and usually we have a little upside bias at the end of one month going into the beginning of the next month as pension money comes into the market. So we're hopeful for an up day on Monday or at least Tuesday, and we want to stay inside this bottom band. Now, when we look at a shorter term, and this is the S&P 500, once again, this red line down here is the 200-day moving average. And we really thought the market was going to come down to this 200-day moving average, but it didn't quite make it down there. But up here, we have what's called a divergence. And this is a bullish divergence because the market made a lower low where this indicator made a higher low, and that's a little bullish diversion, and you can see this little blip down on Friday, and we don't like that. But this bullish divergence is still intact, so we're still looking for an upward move this coming week. How long will it last? Well, we'd like to see it fill this gap right in here, and then we'll see what happens from there, folks. And we can see down here, this black line just seems to want to turn up, doesn't it? Yeah, but maybe we're hoping more than the turn is actually taking place. But if we get a couple of good days this coming week, this will turn up, and that'll give us a really nice, solid buy signal. But until it does, we're still working on this very short-term indicator up here, and a short-term indicator is just that, short-term. It could be 1 day, it could be 3 days, it could be 4 days, but it can also turn in, if this turns up down here, it could also turn into a longer or intermediate term buy signal. We'll just have to wait and see this week, folks. And for portfolio protection, for those of you who want to be protected all the time, this is about a $135,000 portfolio, and we are protected with the SPY, and they call them the spiders, the SPY 410 put. So we're about 4 or 5% above this level, but if the market comes down and hits this level, so that's about 50 points on the S&P 500, then we're totally protected. So if you have these puts, you're sitting very, very well. And don't forget, we use some short-term trades in order to get the money to buy these puts, because you don't want them coming out of your portfolio appreciation. So we have a way of getting short-term, we call it enhanced income, of getting short-term money. We just take a few positions during the year, or maybe one a month, just enough to get enough money to buy these puts, so we don't have to take that insurance money out of our pocket. So folks, if you want to live down near the beach, somewhere between Beachway Drive and Dolphin Road, you're in the right place. So if you remember, if you want to live on the beach like Jimmy Buffett once did, and on the beach where Jimmy Buffett walked at one time, folks, you've got to learn how to invest even better than Warren Buffett does now. All right, folks, you have a great weekend. Get out there, enjoy yourself, forget about the market for a couple of days, because guess what? We'll be right back here on Monday. And for those of you who sign up for the 2-week free subscription, we'll see you right back here beginning of this week. All right, folks, stay safe. Have a good weekend. See you next time.